Welcome to Explain the Charts, where we take a look at the market and break down the news and the charts for you. Today, September 18th, 2024, we're going over Amazon, the giant e-commerce company and cloud provider, Amazon. Looking at the news, we can see there's been a lot of buzz around Amazon's recent developments, particularly their strategic partnership with Intel to develop custom AI chips for their Amazon Web Services, AWS, platform. This move is seen as a significant step towards bolstering Amazon's cloud computing division, which is a key driver of their revenue and profitability. Furthermore, CEO Andy Jassy's cost-cutting initiatives, such as slashing management layers and mandating a 5-day workweek for employees, are being viewed favorably by analysts. These measures are expected to save Amazon significant costs and improve operational efficiency, ultimately contributing to stronger financial performance. Analysts at BofA Securities have maintained a buy rating on Amazon, with a price target of $210. They believe Amazon's strategic moves, including the AI chip partnership and cost-cutting initiatives, will drive future growth and support a higher stock price. However, there are also concerns about the broader economy, increased competition from rivals like Walmart and Target, and the ongoing antitrust lawsuit filed by the FTC and 17 state attorneys general. Despite these challenges, Amazon's retail operations continue to perform well, and its cloud computing division remains a strong growth engine. Overall, the news surrounding Amazon is mixed, with positive developments like the AI chip partnership and cost-cutting initiatives offset by concerns about competition and the antitrust lawsuit. It's important to consider all these factors when assessing the potential for Amazon to move higher or lower. Now let's take a look at the chart data and see if the technical indicators align with the news. First, let's examine the daily chart for Amazon. On the daily chart, we can see that Amazon has been in a strong uptrend over the past several months, with the price steadily climbing higher. The recent price action suggests that the bulls are still in control, with the price holding above key support levels. One of the most significant support levels to watch is the 200-day moving average, which is currently around $165. The price has been testing this level in recent weeks, and it's likely to provide strong support if the price pulls back. Another key support level to watch is the 50-day moving average, which is currently around $180. The price has been bouncing off this level in recent sessions, and it's also likely to offer some support. On the other hand, resistance is likely to come in around $200, as the price has been struggling to break through this level in recent weeks. A break above $200 would signal a continuation of the uptrend and could trigger a further rally to $220 or even $250. However, if the price fails to break above $200, it could pull back towards the 50-day moving average or even the 200-day moving average. It's important to note that the daily chart is not providing any specific signals for a short-term reversal, but it's crucial to watch these key levels and consider the broader market context. The recent price action suggests that Amazon is likely to continue its uptrend, but it's also possible that it could pull back to test support levels. Now, let's zoom in on the 1-hour chart and get a better understanding of the short-term price action. On the 1-hour chart, we can see that Amazon has been consolidating in a range between $180 and $190 for the past few days. This consolidation phase suggests that there's a battle going on between the bulls and bears, with neither side gaining a clear advantage. The price has been forming a series of higher highs and higher lows, which is a bullish pattern that suggests the uptrend may be resuming. However, the price has also been struggling to break above the upper end of the consolidation range, which is a sign that resistance is strong. We can see that the price has failed to break above $190 on several occasions, which suggests that the bears are actively defending this level. A break above $190 would signal a break out of the consolidation range and could lead to a short-term rally to $200. However, if the price fails to break above $190, it could pull back towards the lower end of the consolidation range, which is around $180. The 1-hour chart is providing some interesting insights into the short-term price action, but it's not yet clear whether Amazon will break out of the consolidation range or pull back to test support. Let's switch to the 15-minute chart to get an even closer look at the recent price action. On the 15-minute chart, we can see that Amazon has been trading in a tight range between $184 and $187 for the past few hours. The price has been forming a series of lower highs and lower lows, which is a bearish pattern that suggests the uptrend may be losing momentum. We can see that the price has been unable to sustain any rallies above $187, which suggests that the bears are in control. The price has also been testing the lower end of the range, which is around $184. If the price breaks below $184, it could signal a short-term reversal and trigger a pullback towards $180. However, if the price holds above $184, it could bounce back towards $187. The 15-minute chart is showing a lot of volatility, but it's not yet clear whether Amazon will break out of the tight range or pull back to test support. To further understand the short-term trend, let's narrow down the 1-hour chart to focus on the last 24 hours. This time frame allows us to see how Amazon reacted to the latest news and events. We can see that the price opened slightly lower than the previous day's close, but quickly rallied higher. This initial rally may have been driven by the news of Amazon's AI chip partnership with Intel. However, the price soon stalled and started to pull back, suggesting that the bulls were unable to sustain the momentum. The price has been trading in a tight range between $185 and $188 for the past few hours, indicating indecision in the market. We can see that the price has been unable to break above $188, suggesting that resistance is strong. The 1-hour chart is showing a mixed picture, with the initial rally being followed by a pullback and consolidation. This suggests that the bulls and bears are battling for control, and it's not yet clear which side will prevail in the short term. It's important to watch these levels and see how the price reacts to the next piece of news or event. Now let's recap the important price levels we've identified and discuss what we can look for going forward. On the daily chart, the key support levels to watch are the 200-day moving average, currently around $165, and the 50-day moving average, currently around $180. Resistance is likely to come in around $200. A break above $200 would signal a continuation of the uptrend, while a break below $180 would suggest a potential reversal. On the 1-hour chart, Amazon has been consolidating in a range between $180 and $190. A break above $190 would indicate a breakout of the consolidation range, while a break below $180 would suggest a pullback to test support. The 15-minute chart is showing a lot of volatility, but the price is currently trading in a tight range between $184 and $187. A break below $184 would signal a short-term reversal, while a break above $187 would suggest a potential breakout. It's important to note that these price levels are just a guide, and the actual price action may differ. The market is constantly evolving, and new factors can emerge that could influence the price. Moving forward, it's essential to watch for any news events or economic data releases that could impact Amazon. For example, the upcoming Fed meeting could have a significant impact on the market and could influence the direction of Amazon. Additionally, keep an eye on the trading volume and the momentum indicators to gauge the strength of the bulls or bears. High trading volume and strong momentum indicators would suggest that the bulls are in control, while low trading volume and weak momentum indicators would suggest that the bears are in control. Ultimately, the best way to make informed trading decisions is to combine technical analysis with fundamental analysis and consider the broader market context. By closely watching the charts and staying informed about the news, you can develop a sound trading strategy that aligns with your risk tolerance and investment objectives.